So hey guys, and welcome back to the channel, and today we are back with our monthly algorithmic Python trading strategies update. So yeah, we have 4 strategies. As you know, one of them really successful, it's been back tested over 2 years, and then the 3 others are newer ones. So yeah, monthly update again, looking at the performance, comparing it to the S&P, and then showing you guys the website upgrade again. So again, these are all the stocks my Python fully automated algorithm identified at the start of the month. Very simple. You just web scrape stacks and you take all the stocks that have rank either 1 or 2. You take their price at the start of the month, and then at the end of the month, you take their new price and you get the difference between them. And then this is what this algorithm does. So of course, at the start it's unstable, right? Because it's just one stock. But if you see over all these stocks here, we can view a scrollable element as well. You can see an absolutely outrageous 8.4%. This is not over a year, not over 6 months, not over 3 months, 1 month, 8.4%. S&P 1.39, which is still really good. But yeah, my algorithm is just so simple. It's so simple. That's the beauty of it. It's so simple. 340 stocks out of all 6,000 had rank 1 or 2 this month, and yeah, 8.4%, absolutely beautiful, just made without doing anything. So that's absolutely beautiful. Then moving on to the 3 other strategies, the newer ones, which are actually like backshifted as, yeah, I'll just run you through the earnings one. So for those that don't know, how this algorithm works is it identifies there's quite a lot of conditions. So the rank, of course, has to be either 1 or 2, so strong buy or buy from Zacks. And then the other condition, well, the main condition is that the EPS percentage has to be bigger than 0. So what is EPS percentage? It's the analyst's probability that a stock will beat its earnings. So we're only taking stocks where analysts thinks the stocks will beat their EPS earnings target estimates. And then, yeah, the only other sort of conditions are all about dates, right? So it needs to be not a past earnings, so it needs to be an earnings in the future. It needs to be between the monthly date that we've set, and then also the timestamp, so the time someone looked at the stock from my website, because all of this comes from my website, by the way. The time someone looked at the stock, it needs to be before earnings, right? Because otherwise you're cheating. And then, yeah, we just drop duplicates, we keep the last one, so it's the last time someone looked up a stock just before earnings. So we really get the price just before earnings, and then we get the price after earnings. And you can see 150 stocks met the criteria over the last month, but unfortunately for this one, guys, it was a negative performance. So negative by a tiny amount, right? 0.23%, but still negative when the S&P returned positive. So you can see this is the most volatile strategy, right? It goes from like, what is this, -3 to 7, and then all the way back down to negative, because this is earnings, right? So you're going to get constant upswings of like +10, -10, even +20, -20%. So you're very volatile, and unfortunately we just didn't beat the S&P with this strategy. Going into the dividends one, again, this one is the safest, I'd say, of all my strategies. Very stable. So the only is this called the dividend capture strategy. So again, I'll explain it quickly. Every time a stock goes X, you buy the stock before the X date. You get literally the price just before the X date. You buy it, and then you track the price plus the dividend in 30 months. And it's basically hoping that after the X dividend, the stock will track back to its price with the dividend. So yeah, quite stable, easy strategy to apply. Again, we still only look at rank 2s or 1s. Also, we don't want small dividends, so we check that the yield is above 2%. And again, we check that it's within that monthly time frame. And again, we drop duplicates and keep the last one. So this strategy doesn't identify as much as the other ones. We can actually display the full table here, surprisingly. And yeah, this one, positive return, only 0.77, which isn't bad, to be fair. I think the S&P in the same period, because this is in the same period as the main one, it did 1.05%. So again, kind of comparable, and you expect this sort of low risk strategy to not really outperform the S&P, but it's just sort of a backup. Dividend capture, easy, plain sailing, I'd say. And yeah, 0.77, nothing you can really complain about there. Now this one is the most interesting one to me, because there's been so many studies on it, especially I do finance at university. Well, some of my courses are in finance, and they always talk about this, right? This is called the post-earnings announcement drift. basically what this strategy is trying to do is when a stock beats earnings, the stock tends to go up like, I don't know, 5-10%, whatever. But over the next month, the stock tends to drift upwards. So it means that people are underreacting on earnings day. And there's been so much research, so much literature about this that, yeah, stocks after earnings, they have this post drift that they're talking about. So again, the algorithm is quite simple. My website also has earnings for past dates. So whenever people look at that, you log every stock. This is from Nasdaq, so you get the surprise percentage. So if surprise is bigger than 0, that means a company beat earnings. So we filter by that. We take every company that has a surprise percentage bigger than 0. That means they beat earnings. And then this one, we actually don't even care about the rank, because I want to see for every stock. You can see the sample size is huge, 1,200 stocks in 1 month. So really just seeing if this post earnings drift phenomenon is something real. And again, you look and you make sure they're within your monthly time frame, otherwise you'd have like thousands of stocks, right? Even though in 1 month we have 1,200, because that was earnings seasons 2 months ago is when it starts. And yeah, again, this one, another disappointing one, negative 0.065. You can see all the stocks. I mean, even just in this, you can see, I'm sure, yeah, JP Morgan, Johnson & Johnson, Goldman Sachs, like all of these, they beat earnings, and we were trying to capture that post-earnings shift, but it's not happening with these 3 other strategies, as you'll see when we go to the website. So yeah, it is unfortunate, but yeah, so many stocks, like this is a big enough sample size, you cannot complain about that. Again, it starts volatile when you don't have a lot of stocks, but then it sort of trends around 0. You can see trending around 0, then going to -1 at some point, still -1 here, and then yeah, basically trends back to 0, and we end up with a negative 0.65. So quite a bad hit there, and this is the one I'm the most disappointing about, because literature talked so much about it, but in real-time data, it doesn't seem like it's a tradable strategy. So this was the website from last month. You can see this is the main strategy over 2 years nearly. Next month will be its anniversary on January the 15th. And yeah, I love this strategy. So simple, so easy to replicate in real life as well. And yeah, it's just been destroying the S&P really. And then yeah, the 3 newer ones, of course, we've been backtesting them for way less longer. So the sample size is still not as big as this one, because remember, the S&P was beating us for quite a while here, and it's only recently over the past year that, well, since May, not even the past year, that we've really had this outperformance. But yeah, all the others haven't been doing as well. And when I refresh here, you'll see as updated monthly updates every 15th. But yeah, I try and do it on weekends because I'm quite busy right now, and stock markets are closed anyway. So yeah, that's what it is. So the S&P, you can see, is gradually, it's kind of slowed down, but it's on a positive trend there. Whereas mine, 8% in 1 month, absolutely crazy, and we're now outperforming the S&P by over 13% over 2 years, which is crazy, right? The average market return is around 10% historically, and we're outperforming the S&P by the average S&P return, which is just mind-boggling to me. So yeah, I absolutely love this strategy. S&P, bye-bye. And then yeah, looking at the dividend strategy, again, this one was meant to be stable. Wanted to see, I knew the S&P would outperform it, but I wanted to see from this strategy a sort of positive uptrend. But you see, last month we had a huge negative trend here, but luckily we are back in the positive, even though we're just so bad compared to the S&P, right? 0.4 compared to 12, like, come on, that's terrible. Then this one, again, this one is one I trade. I apply a bit more filters than what I do, like archive filters, as I said, it's just rank 1 and 2. And if the analyst surprise is, if the analyst expected to be earnings, so it's kind of disappointing, I'd say. Badly it's it has a positive performance, like 5% over what is this, like not even 6 months, 5 months. Yeah, so I can't complain really, but I'd like to see how outperform the S&P, although the S&P 12% in 5 months is pretty good, but nothing to scoff at, but I would expect better returns, especially for something that's so aggressive as trying to predict earnings. And then this one, what do I even say about this, right? It's basically, okay, it's not as bad as the dividend one, but it's 11% behind the S&P. Like, what the hell is going on here, guys? Again, I don't know what finance literature bros are smoking. Again, they don't provide any backtesting data, anything. Maybe they're only looking at a specific like number of stocks, because I look at all the stocks basically, and yeah, it seems like the PAD for now, it isn't a thing. I mean, of course, 1% in 5 months, no, that's terrible. Like, let's not lie, guys, that is terrible. It's positive, okay, not bad, but it definitely seems like the post-earnings announcement drift isn't a thing. It looked like it was a thing until here, but then, yeah, 2 negative months in a row, that should not be happening. For the website itself, there's no actual new changes. The one thing I've seen recently in T212 communities is that they've changed the UI again. So I'll just show you, go to my test account here, sign in. Yeah, the other thing to mention is I haven't updated the best stocks out of all 6,000 stocks yet, but this video is coming out tomorrow, and I'm going to run the Python algorithm overnight that, again, WebShapeStax takes all the rank 1 and 2 stocks out of like 6,000 stocks, and then, yeah, you guys can replicate my portfolio here. That's the first strategy that has outperformed the S&P. As I said, super simple. You can even apply more filtering, and then, yeah, this, again, the stock page, you can now go into them specifically. But I wanted to check something. So first of all, yeah, as I said, Trading 212, they've actually changed the UI again, and a lot of people are complaining. So my website always benefits when Trading 212 change their things, because, yeah, my UI is kind of the old view. So you have your portfolio view here, you have the semi-donut chart, you have the whole pie chart with the allocation percentages, and you have extra information that Trading 212 doesn't have. By the way, yeah, again, I always have to say this, but this is my real account, right? I'm a student, this is my practice account. I don't just have 100k here. I wouldn't be making videos if I did have 100k, to be honest. But yeah, everything seems to be working here. I thought I saw some errors. Yeah, no pending transaction on my training account, and then, yeah, the heat map, apparently they've moved this around, so again, I may have to flex that on the socials. It seemed like yesterday was a bad day. I think the whole month and the whole week actually has been bad for the S&P. Let me just check really quickly. Yeah, so over last month, VRAG is minus 1.96. Well, that's crazy, but I think that's more due to interest rates changes, because this is the LSE one, so in pounds, whereas the S&P has actually been positive because our algorithm said it did like 1.39, so I think that's just interest rate. But anyway, everything seems to be working. We are still looking forward to making this sort of dividend page. A lot of people have requested for this, and yeah, just leave your ideas in the comments below. I mean, you've seen what I've been able to build. All of this has been built by me while being a student, working part-time, being the go-out football for my uni and for my job, getting internships. So I've been able to build all of this while doing all of that. So yeah, any requests, leave them in the comments. But I think the next time I'm really going to grind this update, this website, is when I graduate. I'm in my final year of uni, so not too much time, and I'm still potentially on track to get a first. Definitely going to get a 2-1, but if I grind a lot, I can get a first. Of course, I have social life, as I said, football, part-time job as well, while also looking for like go-to jobs, even though I already have one. So yeah, just quite busy. So I don't know when the next update will be. I will promise. Well, the website is always running, right? I'm doing these monthly updates to you guys, and also for myself for the back testing, right, which is absolutely beautiful. But yeah, I think I'm talking a bit too much, but the next time I'll update it with a big update like the dividend page there that so many people have requested, like how many dividends do you get per industry, per company. Trading 212 doesn't really offer that. Maybe a calendar showing what dividends you're going to receive and when, from who, and when your X dates are, stuff like that, subsites like that. That's really unique. And again, everything is linked to the API, so everything is automatic. But yeah, that's the update. Again, really good from our main strategy, my goated, my baby strategy. But the 3 new ones haven't been doing as well, even though the dividend one has kind of recovered and done as expected this month. But the earnings one really disappointed, and this one even more disappointed. But overall, really good month. I mean, 8% in 1 month for the one that I actually trade. Come on, guys, that is absolutely beautiful.